What if you could raise your credit score by 50 to 100 points this month? Sounds impossible? Well, it's actually not. You don't need to wait months or years to see results. In fact, there are simple actions you can take right now to dramatically improve your credit score in just 30 days. Intrigued? Keep watching to find out exactly how to do it. In today's video, we'll be covering 8 fast and effective actions that can help boost your credit score in a short amount of time. Whether you're just starting to build credit or you've been stuck with a low score for years, these tips will help you see results quickly. So, let's jump in and start taking control of your financial future today. Action 1. Check your credit report for errors. Before diving into any credit improvement strategies, the first step is to check your credit report for errors. Many people don't realize this, but mistakes on your report can negatively affect your credit score, and sometimes these errors can be easily fixed. You can get a free copy of your credit report from the official website annualcreditreport.com once a year, but you can check it more frequently using other services that offer free updates. Look for things like incorrect personal information, accounts that don't belong to you, or even late payments that were paid on time. If you spot any errors, dispute them immediately with the credit bureaus. The quicker you do this, the sooner your score will improve. Even minor mistakes can have a big impact, and fixing them is one of the easiest ways to raise your score quickly. This is step 1 to improving your credit health, and it can be done in a matter of hours. Action 2. Pay off delinquent accounts. Next, take a look at any delinquent accounts listed on your credit report. These are the accounts that are overdue and could be dragging your score down. If you find any, the quickest way to improve your score is to settle those debts. Start by contacting the creditors and see if you can negotiate a settlement or pay off the balance. Even if you can't pay the full amount at once, partial payments or payment arrangements are better than letting the debt continue to go unpaid. Once the debts are settled, make sure they are marked as paid on your credit report. Even small amounts of overdue debt can have a significant impact on your score, and catching up on these accounts will help your score improve quickly. If you can, focus on the highest interest or highest priority debts first, like car loans or mortgages, as they can be more damaging to your credit score. Action 3. Pay bills on time, especially rent and mortgage. One of the most important factors that affects your credit score is your payment history. The longer you go without missing a payment, the better your score will be. Late payments can stay on your credit report for up to 7 years, so it's critical to make your payments on time. Start by reviewing your bill payment schedule. Make sure you never miss rent, mortgage, credit card, or utility payments. If you're worried about forgetting a payment, consider setting up automatic payments or reminders so you never fall behind again. Another tip: pay early if possible. Paying before the due date not only helps avoid late fees but also boosts your credit score over time. The more consistent you are with paying bills on time, the more positive impact it will have on your credit score. Trust me, your future self will thank you. Action 4. Reduce your credit card balances. Credit utilization is one of the biggest factors that determines your credit score. This is the percentage of your available credit that you're using. If you're using more than 30% of your available credit on any card, it could hurt your score. Lowering your balances will have an immediate impact. The best way to improve your credit utilization is to pay down your credit card balances. If you can't pay them off in full, try to reduce the balance to below 30% of your credit limit. For example, if you have a $10,000 credit limit, aim to have a balance below $3,000. You can also consider asking for a credit limit increase, but be careful not to increase your spending. The goal is to lower the percentage of your balance relative to the limit, not to rack up more debt. Doing this will quickly improve your credit score and help you manage debt more effectively. Action 5. Pay more than the minimum payment on your credit cards. It's easy to fall into the trap of only paying the minimum on your credit cards, but doing this means you'll be carrying a balance and paying more interest in the long run. Instead, try to pay more than the minimum every month. Even small extra payments can have a big impact. Not only will this reduce your balance faster, but it will also improve your credit utilization ratio, which is a key factor in your credit score. Over time, consistently paying off more than the minimum will show creditors that you're responsible and capable of managing your credit. If you're able to pay off your entire balance before the statement date, you'll also avoid interest charges altogether, which is an additional win. Smart payment habits like this can transform your score quickly. Action 6. Avoid opening new credit accounts. While opening new credit accounts may seem like a good idea to boost your credit mix, it can actually hurt your score in the short term. Every time you apply for credit, a hard inquiry is made, and this can temporarily lower your credit score by a few points. Instead of opening new accounts, focus on improving your existing accounts. Only open new credit accounts if absolutely necessary, for example, if you're applying for a mortgage or car loan. If you must open a new credit card or loan, ensure that it's for the right reasons and not for the purpose of boosting your credit. Every new account can impact your score, so make sure it's truly beneficial. Action 7. Become an authorized user on someone else's account. If you're looking for a fast way to boost your credit score, consider becoming an authorized user on someone else's credit card. This is a great strategy for beginners who don't have much of a credit history yet. When you become an authorized user on someone else's account, their payment history and credit limit will appear on your credit report, which can positively affect your score. If the primary account holder has good credit habits and a low utilization rate, this can boost your score quickly. Before proceeding, make sure the primary cardholder has strong credit and isn't carrying high balances or missing payments, as this could hurt your score instead of helping it. Action 8. Be patient and stay consistent. Finally, one of the most important things to keep in mind when improving your credit score is patience. There's no magic trick that will instantly give you a perfect score. But if you stay consistent with your payments, monitor your credit, and focus on improving your credit utilization, you will see gradual progress. In fact, credit scores fluctuate over time, so as long as you stick to these best practices, your score will steadily rise. Make sure to keep track of your progress using a credit score monitoring tool and check your credit report regularly. Improving your credit score is a long-term game, and consistency is key. With time and persistence, your credit score will improve, and soon, you'll have the financial freedom to qualify for better loans, lower interest rates, and even premium rewards credit cards. Improving your credit score doesn't have to be complicated or take years to accomplish. By taking these 8 fast actions, you can see improvements in just 1 month. Whether you're paying off delinquent accounts, reducing your credit card balances, or becoming an authorized user, each action will push your score in the right direction. If you found these tips helpful, don't forget to hit that like button, share this video with someone who might need it, and subscribe for more helpful financial advice. Turn on post notifications so you never miss a new video. Also, check the video description for tools that can help you manage your finances and monitor your credit score. Thanks for watching, and here's to building a stronger financial future.